every time Amazon gets into a new field, whether it's healthcare, then like Walgreens shot down and CVS shot down. And then when they got into Whole Foods, some of the, Kroger and Sprouts, their stocks went down. And, is Amazon in a potential, stretching themselves too thin? They're in so many businesses now. There's no way they can give you the service that someone like Verizon, T-Mobile, or AT&T can, especially when they have so many other different business segments. But if you look on Friday, T-Mobile and AT&T were down like 5 and 7% pre-market, which is significant considering these guys trade in a range, maybe 1.5% in a day. They're not huge movers, but these stocks are starting to get really interesting. So I'm going to bring up some of their charts. Look at Verizon Communications. They're currently given a 7.5% dividend, trading at a PE ratio of 6. I mean, Verizon's never going to trade at like a 20 PE because their growth is just not there if you look at their EPS. But at 7.5%, I mean, it's hard to argue like a better risk reward. Like, look, in the past year, they're down 13%. In the past year, we're down 31% on one of the biggest mobile communication companies in the world. It seems pretty attractive to me. So let's do a little more investigating on Verizon. So when you click on Yahoo, what I like to see is I like to see what's going on EPS wise. So the last Q1 2023, they did $1.20 in EPS. So I like to extrapolate that over a year. So since it's a quarter, you times that by 4. So you take that $1.20 and it becomes $4.80. So in a year, they're giving out $2.61. So that dividend is still well covered, and it gives them the ability to reinvest in the company. So at $4.80 that they're giving out, and that they're accumulating in EPS, they are giving out $2.61. So it still gives them around $2 in EPS to work with to reinvest in the company, expand the company. So I really like that. And I really like to go to historical data. Check this out. And then we're going to go to time period, right? I like to do, at least 5 years, and we'll see what comes up. And then we're going to go to this click on dividends only. And then frequency, we're going to go to monthly so we can see how they pay out each quarter. And then we hit apply. And if we look out, it goes back to 2018. And look, they've consistently increased that dividend almost every single year. And that's what you want to see as a dividend player. So if we get in at a really good valuation, so say we buy, Verizon at $34.58, and we're getting a 7.5% dividend. As the stock goes up and as they increase the dividend, our dividend percentage is going to be based on where we bought the shares at. So say at some point, Verizon increases to, over the next 2 to 5 years, say it goes to like 0.85. Let's be a little more conservative. Let's do 0.8, say over the next 5 years. And then we're going to divide that, and we're going to times that by 4, because that gives you $3.20 per year that you're getting in dividends for every one share of Verizon you have. So we're going to divide that by the current share price of $34.58. And that's going to come to a 9% dividend. So say in the next 5 years it gets to 80 cents per quarter. You extrapolate that over a year, you get $3.20. And our percentage of dividends is based on where we bought the share. So we'll be getting almost a 9% dividend, which is pretty awesome to me. So I just bought AT&T stock. So I like Verizon a little bit more. I think the risk to reward on Verizon is more because Verizon was trading in the $50 and $60 range at one point. It's currently trading in the 30s. So AT&T just spun off their Warner Brothers segment of their business to Discovery. So they've been beat up. The last 5-year chart is ugly, but they're paying a 7.3% dividend. So over the last year, they're down, even in the past year, down 27%. So we're getting them, if you look at the 5-year chart, we're getting them at a significant discount. They're trading even lower than they were in 2020, but we got to remember that this share price is reflective of that Warner Brothers business that they did terrible things with. It's pretty much, I'm glad that they spun that off because they weren't able to capitalize on that segment of their business. So at $15.21, we're currently getting a 7% dividend, and we're going to do the same thing for AT&T. So we're going to, remember guys, we're going to go to time period first. We're going to click 5 years, and we're going to go to dividend only, and then we're going to go to monthly and then hit apply. So here is when they spun off the business recently. So they were given around 50 cents per share. So this is the new norm for them. So we're going to have to keep an eye on this historical data, and if they can keep the dividend around this range and maybe increase it over time, we'll also be able to get, you know, some share appreciation as well as dividend percentage appreciation. But I just bought some more AT&T. I bought some more Verizon. I like Verizon a little bit better. I think their business model is better. So if you guys are looking for some 2 really good dividends to add to a dividend portfolio or help balance out a growth portfolio, I love Verizon. And a close second place is AT&T because they're trading at such a depreciated valuation. I think it's going to give value to shareholders over time. Thank you guys so much for tuning in, and we'll catch you guys on the next video.